Forget Greenland. Investors should be paying attention to the Japanese government bond market. While this is going to be an important story all year, I think there's no need to panic. This chart shows the yield on 30-year Japanese government bonds. They've been trending up for a while, but as you can see, they suddenly spiked on Monday. That's because of some of the pledges that the Prime Minister has been making. Japan has a new Prime Minister, Sanae Takaichi, and she is known as a very strong advocate for government stimulus to keep the economy growing. She's called a special election to consolidate her support, and now she's starting to make some stimulus promises that are unnerving investors a bit. One concern is that higher bond yields in Japan could push bond yields higher elsewhere in the world, including the United States. However, investors should keep a few things in mind. Japan's debt to GDP ratio is famously quite high, at around 200% of GDP. But as you can see here, it's actually been trending downward, and that's because of the impressive growth of the Japanese economy. Japan's finance minister this week had a chance to address global investors at Davos. She pointed out that Japan's government budget deficit is actually quite small, at only around 0.6% of GDP. That would make it the smallest budget deficit relative to the economy of any G7 nation. The really important point to keep in mind is that Japan's high indebtedness is as much a function of their past low growth and deflation as it is of government spending. And that means that the key thing to watch going forward is not just how careful politicians are with their money in Japan, but also how well the underlying economy is doing. And that will determine how sustainable their debt load really is.